Hello, welcome back to another video. In today's video, we'll be going over how we leveraged order flow successfully to scalp Apple using Quant data. I'm Andrew, the CEO of Quant data, and today we have Mo, the CFO of Quant data, joining us.
All right, hope you're having a fantastic start to your day. Now let's get in details about Apple's unusual options activity today.
So we'll go ahead and begin by talking about how we found Apple this morning. So Apple popped up on our radar when we saw that it was moving up our top gainers table. And the top gainers table is just summarized data from the order flow feed. So it's the top stocks that have the highest amount of order flow for that time period. And we saw that Apple was moving up the top gainers and had 281 calls that were worth 16.42 million in premium. So we'll go ahead and switch it over to Mo, and he'll go ahead and show you what we saw on the dark pool levels this morning.
All right, thank you, Andrew. If you're watching that 138.52, we actually received about $280 million that have been accumulating over time at that range. You can use that level 138.52 as a level of supply or demand, depending on where you are in the chart. Now, looking into today, that was actually a level of supply. That was our resistance. And once it was mentioned in the room at 9:43, 9:44 a.m. by Andrew, we started seeing a lot of bullish flow come in. We started seeing a lot of buyers start sizing on that 139 and 140 contracts, which ended up the day, by the way, the 140s had 210,000 in volume, and the 139s had about 200,000 in volume, which is huge considering the open interest on both is less than 20,000. Now, if we also saw the dark pool print that's been adding over value at the 139.96, there's $292 million in notional value at that range. And that shows you where Apple ended up the day. It actually consolidated between the 138.52 level all the way to 139.66. And that's where you can see the rejection occurred towards the end of day. So we'll go ahead and transition back to the Quant data platform and understand how to leverage order flow to make a timely entry.
So we'll go ahead and take a look at the order flow that helped us make a decision on whether or not we were going to trade Apple. So on the order flow around 9:42 a.m., we began to see a bunch of repetitive bullish order flow. What is repetitive bullish order flow? It's order flow that is coming in on the ask side, specifically calls that are coming on the ask side. We know that these calls are being purchased. So when we see many of these call orders that are executing on the ask side or above ask, which shows even more conviction, we begin to get a sense that the sentiment on Apple is increasing, right? So alongside with the repetitive bullish order flow, we noticed this trade right here specifically that had an ISO designation. And what exactly is an ISO designation? An ISO is an intermarket sweep order, which is just another execution type like automatic execution, or like you see under the ISO, a floor execution, which is a trade that executed through the floor. But what makes an ISO special is that the ISO does not have to fulfill Reg NMS obligations. What this means is that the orders do not have to wait for the best bid and offer. So that shows us urgency because these orders do not have to wait for the best price. So the institution that is making this order knows that they're sacrificing the best price in order to execute their sweep quicker. The whole idea behind submitting an ISO execution type is that you can get more contracts quicker. Although you might sacrifice some of the best price, you're getting the contracts faster than your peers. And that obviously goes against the NBBO, but ISO is a special exception that is defined by the SEC. So we can use orders like these that have these special exceptions to see when institutions are trying to get in quickly. They're trying to get in urgently. So the execution type, whether it's an ISO, a floor trade, an automatic execution, a spread, or whatever trade type you're using. And in the description, I'll link all the trade types that we show. Another thing that we used aside from the execution type was the disparity between the calls and puts. So as we got closer to that 9:43 a.m., we began to see more bullish call order flow executed on the ask side than we did that bearish put order flow. And that just showed us the overall sentiment of both institutions and retail traders as we moved on to 10 a.m. We'll go ahead and switch it over to Mo so we can talk about the thought process behind our contract selection and how we actually use the order flow to select specific contracts.
So we did actually see a lot of buyers approaching that 138 call expiring 2nd of July. These contracts were going for about 60, 65 cents when we started realizing 943, 942. When Andrew pointed out the ISO trade in before, we started actually watching the order flow. Now you could see at 943, that order July 2nd, you could see they were trading what? They bought 180 size at 65 cents. 10:03, about 20 minutes later, these contracts were up 52%, okay? So we did have a massive rally. The key was to lock in profits and to leave a runner. If you're somebody that scales in and out of trades, it's very, very critical to always take your position. But if the trend is in your favor, no problem in leaving the runner. And I did actually leave one runner towards EOD and realized that made 155%. That contract went to 185, $1.85 or $1.90, making almost a $1.40 move since that moment we realized it in 942. So again, just seeing that when you can trade those weeklies, there's potential to capitalize on a move, especially when contracts in the money are going for 60, 70 cents. You can take them all the way to $1 plus, and especially when order flow is on your side. All right, so we're gonna go ahead and pull up the chart so you can see the exit as we were getting out of these trades at 10:03, scaling out at 52% and leaving the runner towards EOD. Again, everybody has a different approach, but let me pull up the chart so you guys can see what we'll see. All right, so you can see here on the chart 138.52, which was the critical supply level, and also a dark pool print at that range where we saw almost 2 million in notional value. Now we broke over that level at 943, 945. You can see how we bounced that level as support and rallied for another, give or take 40 cents or 50 cents to the whole number at 139. Now, as you can see, we saw some rejection on the first 5 minutes, second 5 minute candle. That's when we decided to take our exit because again, we're trading weekly contracts. So really critical to flip premium when you're happy. And around 10:03 on the top of this wick, that was the exit for us. We got out about 52%. Again, some people exit full position, some people left a runner. And if you saw the movement towards EOD, those contracts went to 185 and 195. So almost another 100% move since our exit. With that being said, I'm going to go ahead and pass it over to Andrew.
That wraps up the video. Thank you guys for watching. If you have any questions, feel free to drop them down below. Also, if you like this style video, let us know and we'll make more of them. Don't forget to join our Discord community where you can come trade with us and our members. And also don't forget to sign up to a free 7-day trial. Take care and have a good weekend.
Thank you for joining us and hope you have a fantastic 4th of July.